Welcome back, ladies and gentlemen, for another episode of Likeable Figures. Here to help you out with things you may need help with. And I'm your boy, Major Wala. And today, in this video, I'm going to be going over 5 mistakes that new homeowners make when trying to go purchase their first home.
This motivation. Suck, get on your job. If you hate, get on your job. You can look me in my eyes, see I'm ready for whatever. Anything don't kill me, make me better.
Now, purchasing a home is supposed to be a fun, exciting experience, especially if this is going to be your first home. It should be a little scary, don't get me wrong, but it also should be exciting. You should not be worried through this process. You should not be feeling like you jumping through hoops trying to get yourself inside your first family home. And I know many buyers purchase homes every year trying to live the American dream, but I want you to ask yourself, whose dream is actually 30 years worth of debt, right? And whose dream is being denied and denied and denied, forcing you to jump through hoops to be inside a house that you really couldn't afford because your interest rates were too high, or it just wasn't the right time in your life to making these decisions. And in this video, I'm going to be going over 5 mistakes that new homeowners make, but I'm going to be also giving you remedies to those mistakes that you can use to be able to put you in a better situation when you're trying to get your home. And for all those that stick around to the end, you always know I got a gift for y'all. 3 guaranteed things that you can do to get approved for your home loan. If you stick around to the end, you'll get that free gift. Let's jump right into it with the 5 mistakes new homeowners make when trying to get their first home. Mistake number 1, applying for a home loan with pre-existing credit issues. Many consumers apply for home loans each year knowing that they have pre-existing credit issues, but they're doing it with their finger cross method, like they're crossing their fingers and hoping that they'll get approved. Now, in some cases, some people get approved, but in most cases, people get denied. Usually, in most people's lives, there's that one event that happened in your life that causes you to either pay late or fall behind on payments that you may have, whether that be credit cards, car loans that you have, any other accounts that you may have opened under your name. Something might happen in life that causes you to fall behind and miss a payment or be late on a payment, and those things causes problems with your credit. And most consumers that have problems on their credit, it's not the consumer fault, it's the broken credit system fault that you have these bad issues on your credit report. And these things can cause you to always get denied for future things that you're applying for. The simplest account where you're trying to get a secure credit card or even open up a bank account, these things can cause you to be constantly denied. And I know people that don't know about credit, you just assume that these things are going to fall off and sooner or later you don't have to worry about it and they'll just disappear, right? Wrong. I was under the same instinct, but that's how I came and started taking control of my credit situation and got on top of it and started to realize, oh, this is really like a game. We have to play this credit system just like it's a game. Because we all heard those myths. Oh, if you wait 7 years, it'll fall off. But who wants to wait that long? Who got time to wait that long before you want to get some house, right? If that is your goal, you don't want to wait 7 years. Time limit for account to fall off varies depending on what state that you're in. Don't forget, those 7 to 10 years that account is sitting on your credit, just know your credit is never improving. It's always going to go down, and you're going to be wasting a lot of money on trade lines and secured credit cards, and your credit is not going to move at all. So really, you really want to realize that credit does not fix itself. You are going to need to work on your credit. Either you work on it for yourself or hire a company, Voila Solution, because the only way to improve your credit is to delete the old accounts and add new positive good standing accounts in each place. Because if you only delete and you don't add anything, that's going to cause your score to drop too. But every negative account that you get deleted, you want to add a new positive good standing account in its place. Following those steps will dramatically boost your credit, improve your credit score, and allow you to be approved for that home loan you so dearly want. Mistake number 2, paying to delete a collection, paying it off. That's what you hear. Go pay that off and then see what it boosts your credit. I'm here to tell you, paying the collection out is one of the worst things that you can do when you're trying to boost your credit and be approved for a home loan. Those old accounts, the company that you got that, they'll take your money, but they not in control of that debt anymore. They sold that debt. They charged off that debt. So don't be caught up in the trap of paying off collection. If it says collection, stop. Don't send no one any money. You have other issues that you have to deal with before you move forward. And you will even have your mortgage broker tell you, hey, go pay off this account and then come back and maybe you would apply. Don't fall for that. That is the banana in the tailpipe, because I know you may go spend all this money trying to pay off accounts and you assume that, hey, since I paid these accounts off, my credit should be better now. Doesn't work that way, because in reality, paying off collections does not improve your credit rating. Because once an account go into collection status, that means it's designated as a charge-off. So that means once you pay the balance off, the balance will report as 0, but it still will, the status of that account still will be reporting as a collection, and it will not improve your credit rating. And your credit rating score is a number which reflects your risk of defaulting. So it tells the banks or the lenders how low or high you are on defaulting on the account that they may give you. Now, on the other hand, a way to fix the negative items is to dispute it and delete it. You disputing this account with the people that are in control of this account now. And most times, they don't have all the correct information. So you don't have to pay anything, because if they don't have the correct information, guess what? They are not allowed to put it on your credit report. So disputing is a lot better than paying it off, and it keeps money in your pocket. Once you go through the dispute and delete process, when the account is deleted, there's no record of this account ever being on your credit profile. And plus, this boosts your credit rating, and it's as if the account never existed. So do yourself a favor and don't make the mistake of throwing money away trying to pay off collection. Be smart, take your time, and go through the dispute process. Either you can do it or you can pay someone to do it, which our solution is great at. Mistake number 3, waiting to purchase your home when your credit get better, right? So you have those people, they go get denied, and you have negative items on there, you don't want to deal with it. So you just think to yourself, hey, I'm not going to deal with it. Maybe if I just wait a little while and then come back, maybe my credit will be boosted out of thin air, I guess. Because I say this to say, because I have many consumers that does this. They go apply, they get denied, so in their mind they think, I got denied now. If I wait for a little while, but if you got other negative accounts sitting on your credit profile, it's not going to work. So you're going to be waiting and waiting and waiting, and you're just wasting time, because waiting does not improve your credit rating. Action improves your credit rating. And so after the 17 years and it's fall off, now you got to think you done wasted 7 to 10 years prolonging you for being in your home. And so think about it. If you waited 7 to 10 years when you're applying for the home this year, interest rate are right what you need, right? But if you wait 10 years, that's a decade. So you got to think interest rate is going to be different. Loan terms could change. You don't want to wait. You want to take action to get these things done as quickly as possible. Mistake number 4, trying to solve your credit issue problem, your denial problem, by getting a cosigner. Getting a cosigner does not help you get approved. The cosigner will only help you to increase your income limit. So just say if you make $60,000 a year, but if you add a cosigner and they make 60, now your income is $120,000 a year. The cosigner cannot help you improve credit score issues. A cosigner cannot help you with those things. It cannot help you if, just say, if you need a 640 to be approved for a home loan, you get a cosigner that has a 740, but you only have a 620. A cosigner will not close that gap between the 740 to the 620. You will have to improve your score to get a 640, no matter what you have heard. But it cannot be done to improve if you have credit score problems, credit profile issue. Cosigner will not help you with that. All borrowers must have acceptable credit scores when trying to apply for a home loan. So don't make this mistake by trying to solve your issue with getting a cosigner. This will not solve your issues, okay? But speaking to a professional credit company can solve your issues. It's not a big deal that you have negative accounts on your profile. Everyone has these. Everyone had, no matter what someone ever told you, everyone had a negative account on their credit profile before. That's not a big deal. Get these things deleted and stop letting them hold you up. Once you have went through the dispute and delete process, now you have acceptable credit rating. Now you're able to get the home loan. It's simple as that. Mistake number 5. Some people want to say, I'm just going to look for my home now and then I'll fix the credit once I find the home. That's not something you want to do. Because, so just say you find a house that you fall in love with, it's the perfect house for you. So now you go to try to go get qualified for the loan to buy the house, correct? But now they tell you you don't qualify. So guess what? You found a home that you're in love with, but now your credit score isn't high enough to get it. So guess what you're going to want to do? You're going to want to go to, you're going to try to do it yourself, you're going to be rushing, or you're going to go to a credit repair company and have them try to rush to boost your credit, or you're going to try to do something illegal to have your credit boost up to be approved for it. Instead of you just going through the process of having your credit rating increase the correct way by going through the dispute and delete process, and then because some process maybe you might have something on your credit that only takes 30 days to get deleted, but in that time frame, interest rates can go up, loans agreement can be changed. It can go on in 30 days. And some people, your credit improvement process could be 6 to 8 months. If you already find your home and now someone tells you that it's going to be another 6 to 8 months before you can even apply to be approved to move in your home, that's going to frustrate you. You got to know that you got to make the correct steps. And the correct steps is having your stuff in line so you can go find the house that you want. But if your credit score is subpar and you're in the low 500s, and the bank causes you to have a 640 credit score, that's too much room for even the universe to fix. So you got to think about it. Don't go and find a house without fixing the problem. Fix the problem first, whatever the problem may be. And it's not a big deal. I want to stress that to you. It is not a big deal. It's something that can be fixed, and that part of your life can be over and gone with in your rearview mirror. If you're in the market of buying a home, do yourself a favor. Before you even go out searching for a home, pull your credit report. Pull your credit report and see what your credit rating is. Before you go to talk to anybody else, this is something that you can do on your phone, in your own time. You ain't got to let nobody else see it. You can do it just you yourself personally. Pull your credit, see where you at, see if you right position to be applying for anything at that. And if your credit is below a 640, you're not in the position to apply for things. It's some work that needs to be done to your credit. So you're going to focus on doing the work first, get your credit to the point where you need it to be at. And I know it's going to be someone out there that says, oh, I got approved for a car and my credit was a 5-something. And I bet your car note is higher than a person that was above the 640. So you can save yourself a lot of money by just pausing off your wants. Don't give in to your wants. Do what you need to do in the beginning to improve your credit rating, and then go after your wants. It works out better with you. It saves you money. It saves you time. It saves you heartbreak. So do what you got to do in the beginning so you can get what you want in the end. I told you, for anyone who stuck around to the end, that I was going to give you 3 things, guaranteed ways that if you do these 3 things, I guarantee you're going to get approved for any home loan that you apply for. The first guaranteed fact is having your credit profile approved before you apply. I guarantee you, if you do what you need to do to get to a 640 before you apply for the home loan, I guarantee you get approved. Number 2, instead of paying these collections off, wasting money, paying off collections, save that money, go through the dispute and delete process, save the money. Now once you're saving the money, guess what? You have a bigger down payment. And with that bigger down payment, guess what? Now you have more collateral to offer the bank. And 3, find a more lenient lender. There's lenders out here that will let you ride with a 600. It will let you ride with a 620. You just gotta find the lenders that work out. Do some research. If you do the research, I guarantee you there's someone out there that can work with you, that they have so many programs for new homeowners that you yourself can benefit from. See, there you have it. That wasn't so bad. I hope you guys learned something. I hope that it was educational and something that you can use in your life. And us at Likeable Figures, we love to see you be better and do better. I'm your boy, Major Walla. Peace.